What's up everyone, it's Scotty with MoneyVest. In this video, we are going to be talking about two stocks that, in my opinion, are still very high quality companies. These are companies that we've analyzed on the channel before about a year ago. So close to 11 months ago, I talked about these two stocks that were potential buying opportunities considering how they were selling off. And these are two very under the radar companies that not a lot of people are talking about. And now I'm starting to see a lot of YouTube videos sort of pop up about these companies. So I hope you all enjoyed this video, find it helpful. Make sure that you drop a like. We're going to be using our MoneyVest platform to essentially analyze these two companies, and both of them are actually trading at a very decent, very high 3.9 M score. So again, hope you all enjoyed this video, find it helpful. Make sure that you drop a like and of course subscribe to the channel as well. So the first stock is going to be Technoglass, and this is a video I did about 11 months ago talking about how there could be a potential opportunity in this company. At the time, it was trading at $38 a share, and it was down over 30% from all-time highs. If you come over to where it's trading now, it's well over $54 per share, and from the time when this video came out, at around $35 to $38 a share, the stock is up a nice 69 to 70%. Pretty much trading back up to all-time highs. And for those of you who don't know, Technoglass essentially is in the business of providing glass. So for all commercial residential glass, this is the company that a lot of construction companies and manufacturers go to for all their needs related to glass products. And if you come over to our MoneyVest platform, again, you can see the M score is around 3.9, which is a very strong M score because this is a calculation. This is a numerical value that we have assigned to each and every stock listed on the New York Stock Exchange and NASDAQ using our platform. So if you come over to the MoneyVest metrics, if you go over to the last, let's say 7 years worth of analysis, this is a company that has been consistently growing its revenues very nicely on a CAGR of over 15.4%. Gross profit is also up by almost 20%, and operating income is high growth, so over 27% growth in terms of its operating income. If you come down to the bottom line, net income has been growing at over 34%. So this right here are the numbers for Technoglass. Absolutely incredible. And this is exactly one of the reasons why I essentially did a video on this company 11 months ago, because of the very consistent and profitable business that this company is. If you come down to free cash flows, it's been rather stable because there a couple years they've done negative cash flows to now being positive at almost over $60 million for the company. Again, all values are in millions except for earnings per share, which has also grown at almost 25%. Now, one of the things that is not great about the company is the amount of share dilution. So the company has issued a lot of shares. However, that has more or less stabilized in the last 3 to 4 years. So if I remove for everything, revenue, operating income, net income, you'll notice the shares outstanding have been more or less stable over the last 3 to 4 years. So if you come over to the last, let's say 3 years, shares outstanding are only up by about 0.79% versus 5 years, it's up over 4.5% versus 7 years, it is up a little bit over 6.6%. So the more recent trend is really just flatlined for Technoglass. If you come over to margins, it's been expanding across the board. I mean, take a look at gross margins, operating margins, net margins. Everything's been moving in the right direction. However, year over year, we're seeing some stabilization, but very nice consistent increase in the company's margins here. If you scroll all the way at the bottom, we've got efficiency-wise, again, a very strong, efficient company, return on assets of well over 19%. And that has seen a significant increase over the years. Return on equity at almost 33%, 25% return on capital, invested capital, and then we got return on capital employed of well over 35% as well, and a very, very low stock-based compensation as a percentage of revenue and free cash flows and operating cash flow. The company also does have more cash than debt on the balance sheet. We can also confirm that by coming over to our fundamental analysis table. If you go to the last, let's say 12 quarters and come over to cash flows, this right here is going to be the free cash flow situation. Some quarters they're doing negative cash flows. The last 3 quarters, very consistent, around $25 to $28 million in free cash flow. And again, coming over to the balance sheet, they're sitting on total cash of well over $138 million, with long-term debt sitting at $154 million. So a little bit more debt than cash on the balance sheet. However, debt number has been coming down and cash has been increasing a little bit. I just want to make sure they don't have any long-term investments, which they do at $61 million. So if you add these two numbers, we're sitting on almost $200 million worth of cash and cash equivalents and long-term investments, with long-term debt sitting at about 154 million. So they do indeed have negative net debt, which again is a very strong thing for the company. And you can see long-term investments have been consistently going up on a quarter-over-quarter basis for the business as well. Analyst estimates wise, we've got a strong buy rating on this stock, 5 buy ratings to hold, with a high price target of $71, with an average target of $60 and a low target of $50 a share, with a compounded annual growth rate. So this is not a company that's going to be expected to grow at a super high rate at only 5.7% over the next 4 to 5 years, and revenue expected to increase by over 4.4%. So this is not a super high grower at the moment. And if you come over to ratios and take a look at the company's forward price earnings multiple, again trades at a really low 15.48, slightly higher than its 5-year average of just under 13, and price to sales on a forward basis at under 3, which again compared to the average of 2.7 is kind of on par with the 5-year averages for this company as well. So if we look at the analyzer now, discounted earnings model, and if we come over to, let's say, a 5-year analysis, and over the last 5 years, again, the company has done incredibly well in terms of growing their numbers. So if you come over to the last 5 years here, you'll notice that the compounded annual growth rate for net income has been well over 82%. So that is, again, a very, very strong growth rate for the business, as they have essentially gone parabolic when it comes to profitability. However, I do believe that this number is not going to go on forever. Of course, we can't assume for an 82% increase, so I'm going to go with a very modest 6% increase over the next 5 years for this company, considering that analysts are also expecting for a modest 4 to 5% increase, with a P multiple of, let's say, 15, kind of aligned with where we are right now on a forward basis. 10% margin of safety, 12% discount rate. I just want to make sure the company does not pay any dividend. So dividend yield of about 0.67% is what I'm seeing. So we've got a very, very small dividend of 36 cents per share with a payout ratio of 10.3%. So that's a really low number. So if you come over to Analyzer, we can keep the 12% discount rate, again, 6% growth rate, and about a 15 times P multiple. Share dilution, as I showed you guys, over the last 3 years, it's been really low. So I'm going to go with 0.5%. If we hit calculate, we're looking at a stock that, once again, boasting a fair value around $30 or $39. That would require about a 28% downside needed in order for this stock to once again be trading at its intrinsic value. And that's probably because of the lower growth rate for Technoglass. And you can see that from this sensitivity grid. If you are looking at slightly higher growth rates, so let's say that you assume for 8% or a 10% growth rate over the next 5 years for earnings, then of course your fair value jumps to $42 or $46 or $51 per share, while consistently keeping the P multiple at 15. So it really depends on where you believe the growth rate is going to be for Technoglass. For me personally, I think about a 6 to 8% growth rate is reasonable. So anything between $38 to $42 a share would be reasonable for this company. Right now, of course, it's trading at around $54. And if I bring up the technical analysis, $27, $20, of course, being a very strong support. We did some analysis on this stock before as it was coiling into this downward wedge, and of course, broke out to the upside, rallying well over 100% or close to 100% and 90%, breaking out, and of course, almost trading back up to all-time highs at almost $60 a share as well. So that right there is going to be that next target, and a very strong support sitting right over here at $40, $41 a share. It's bounced off of that level not once, twice, 3 times, and up until 3 weeks ago, it was trading at low 40s, which I do believe is going to be a reasonable opportunity, reasonable pricing wise, also very good opportunity for Technoglass. Something to keep in mind, of course, a 25 to 30% downside needed in order for this stock to be trading back down to what I believe to be its intrinsic value. And again, you can use this tool, play around with these numbers. That's going to be available with a 51% discount if you are interested in joining us, with 4 spots left, and you can lock this discount before the end of this month, and of course do your full fundamental analysis on individual stocks. And of course, we're going to be adding a lot more features over time with portfolio analysis and our macro dashboard, as well as the MoneyVest index as well. Now, the second stock that we're going to be analyzing today is going to be XLS Technologies. It's going to be ACLS. And this is another company that we have analyzed before on the channel, which has also done really well at $147. I remember talking about this company when the intrinsic value was in the low 120s, and also talking about a very strong support in the 100s, and it actually came down to as low as $95 per share during the entire sell-off. And again, M score at 3.9, so very similar to Technoglass. If you come over to the MoneyVest metrics, again, very, very similar numbers to what we just witnessed. By the way, for those of you who don't know, XLS is in the semiconductor space. So if you come down a little bit, manufacturer capital equipment for semiconductor chip manufacturing industry, company headquartered in Massachusetts, about almost 1,400 full-time employees, and high current and medium current implanters for all application requirements. In addition to that, company provides extensive aftermarket lifecycle products and services, including used tools, spare parts, equipment upgrades, maintenance services, customer training, all that good stuff in the semiconductor sector. And the valuation, once again, on a trailing basis is quite reasonably low for a semiconductor stock. Coming over to the MoneyVest metrics here, if you look at the 7-year worth of analysis, we've got very nice, high, consistent growth. The revenues were a little bit more stable back in 2017, 18, 19, but post-pandemic, they've seen very, very consistent growth across the board for revenue, gross profit, operating income, and net income, as you can see over here. Very nice increases, and the margins have also expanded, where the gross margins have gone from 36% to well over 43%, operating margins from just over 11% to well over 23%, and net margins from 30%, they've slightly come down to about 21%, although they did decline in 2018, and of course recovered back higher very, very nicely, as you can see over here on this chart. When it comes to efficiency, we've got efficiency across the board, and again, one of the best balance sheets out there with more cash, less debt, more cash than debt on the balance sheet, so negative net debt with current ratio, quick ratio well over 3 and 4. Total assets are well over total debt. Total assets also do exceed total liabilities. Net debt over EBITDA negative, cash debt over 5.7. So again, excellent across the board. And the valuation also is somewhat cheap to a bit of a premium depending on which metric you are looking at. So coming over to fundamental analysis here, again, we're looking at 12 quarters worth of analysis. This right here has been the revenue and the gross profit for the company. Very nice, consistent growth. Although the last couple of quarters, we are seeing a bit of a decline in both revenue and profitability, which we'll take a look at in just a minute. And if you come over to the balance sheet, again, plotting for total cash, and then coming down to total long-term debt, which is going to be at $43 million. We do have, again, significantly more cash at well over $530 million versus long-term debt sitting at $43 million. So really, really low number here for this company. So again, one of the best balance sheets out there for this business as well. If you come over to cash flow, all the way down, free cash flow has also been increasing. As you can see, it's a little bit more inconsistent, but nonetheless, positive cash flow of well over $40 to $50 million per quarter for the company as well. And then finally, coming over to the ratios for this business, to take a look at the forward multiples, we're looking at around 23, which is a little bit higher than its trailing number. That simply means that, again, the growth expectations are for a decline on a year-over-year basis, and price to sales sitting at over 4.4, slightly higher than its 3.79 5-year average for this company as well. So if you come over to analyst estimates, we've got a buy rating on the stock with a high target of 183, low target of 126, and an average target of 153. With analyst expectations, you can see 2024 with a 13% decline, coming down from $7.43 down to $6.46. As I mentioned earlier, that's exactly why the forward price to earnings multiple is at over 22 compared to the trailing at 19. When a forward P multiple goes up, that means the companies expect to decline in earnings, but then again accelerate post 2024 at well over 27, almost 28%. So we can't really do we can't really do an analysis on the intrinsic value for this business because we don't really have a lot of data. But this is another stock that I would put on your radar only because I feel that post 2024 is when the recovery would begin. This was a stock that was super beaten down from its highs of 195, essentially dropped over 50%. We talked about it, and it's done really well, and since it's up over 60%. It's now back down trading at that support at 140, but I would still be interested in the low 100s for this stock over here. So this right here is a price point where I would put on your watch list to consider. That's going to be, again, down in the low 100s, down as low as $95, $94. So actually, this was a stock that actually traded down to low 100s and down to $95, not Technoglass. But this right here is going to be that near-term support with a target up to as much as $200. That's going to be back up to almost all-time highs. It's going to be representing about a 34 to 35% potential upside for the stock as well. So these are two companies that I believe are high-quality, good businesses, profitable businesses with very good balance sheets, and a potential target that represents about a 25 to 30% upside over the next year. XLS a little bit more cautious because the 2024 EPS expectations are for a decline. Technoglass, in my opinion, has potential to get back up to new all-time highs. Of course, patience will be required for them to come down to those intrinsic values so that we can scoop up some shares at better and better values. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like and subscribe to the channel. Also, don't forget, if you want to get access to all the data for individual stocks, do your full fundamental analysis, comprehensive analysis on these individual stocks. Link's going to be down below. We'd love to have you on board. And again, if you have any questions, please feel free to reach out. 51% discount available until the end of this month. And as always, happy investing. I'll see you all in the next video.